welcome to this webinar on business entities. And I'm so glad to be partnering with Julie Harris on this particular webinar. And we're going to be talking about just what is a business entity. And so we're going to just jump right into this. I'm going to pull up our PowerPoint slides here and we'll get started. So welcome again to this Business Entities for Private Practice webinar. And the reason we decided to do this webinar is we've just gotten so many questions in the previous webinars that we've done just around these particular issues. And so what we hope to accomplish in this webinar is we really want to help you understand what your options are around a business entity. And another thing we want to say here, and this is just our disclaimer, is we are not attorneys, so be sure to check with somebody in your area that is an expert and an attorney and can give you some sound legal advice. We're not trying to give legal advice here. We're just basing all of this information on our experience and work. And just let me tell you a little bit more about who we are. So I'm Gordon Brewer. I'm the person behind the Practice of Therapy podcast and blog. And I'm also a private practice owner, have a small private practice, Kingsport Counseling Associates, located in Northeast Tennessee. And so, Julie, tell them about you.
Yeah, so my name is Julie Harris. I am the owner of GreenOak Accounting. We are an accounting firm that specializes in working with private practice owners throughout the United States, and we are based in Northern Virginia, just outside of Washington, D.C.
Great. So again, I'm so grateful to Julie for partnering with me on these webinar series, these different series that we're doing. So here's what we hope to cover today. You want to talk about that, Julie?
Yeah, so today we're going to talk about legal entities. We're going to talk about tax entities, and then we have a lot of time. We received a ton of questions, so we'll go over a lot of Q&A from viewers like you.
Great. So let's jump in. So how do you know what is the best business entity for your practice? And I know Julie and I have talked a lot about this, but you want to say a little more about this, Julie, about how somebody could really go about choosing this?
So the true answer is there is no one size fits all for everyone. It really depends on your situation. Like, for example, how many owners are in your business, how much money you're bringing in, how many employees you have. But it also depends very much on your state, what's going to be the best entity for you.
Okay. Yeah, so one of the things that we might, I think a good place to start is to really think about what exactly are legal entities. There's two different ways to think about this, or two concepts to understand. There are legal entities, and then there's also tax entities. Now they're connected to some degree, but as you'll see as we explain this more, a legal entity doesn't necessarily mean it's the same as a tax entity. So I want to explain a little bit more about that. When you think about going into business, one of the things that you have to be concerned about is being able to protect yourself as an individual and being able to separate your business from you as a person. Now, in the United States, kind of at the basic level, is what is called a sole proprietorship. And that is just simply, if I decide tomorrow that I want to go start a business and I start selling, let's say I start selling lemonade on the corner out here. I am the business. I'm a sole proprietor. I'm selling lemonade. And so the liability of the business is totally on me.
Yeah, you and the business are one.
That's right. We're just one thing. And so from a legal standpoint, but also from a tax standpoint, there's no difference between me as the individual and the business that I'm running. With an entity, though, there's a way legally to create a separation. So you're almost treating your business like it's a separate person, somebody different from you. And so that's one of the big things to consider with that. Now, there's several different ways to go about setting up. There are different kinds of legal entities. So probably the first level up from a sole proprietor is what we know as an LLC, or limited liability company. And what that does is just creates a firewall there kind of for you, as I like to think about it, between you and your business. So worst case scenario, somebody decided that they were angry with you or didn't like what you did and they wanted to sue you. They can't go after your personal assets. They can't come take my home. They can't come take my car. They can only take the assets or the value of the business in that situation. The other, yeah, go ahead, Julie.
One thing we can note too here is that liability protection can be eroded if you don't treat your LLC as a separate entity. So you really, like when you set up the LLC, you have to treat it completely separate. It needs its own things, right? Its own books, its own bank account. It needs to be treated completely separate in order to keep that protection.
Yes, very, very good point. And I think that's maybe sometimes when people are first getting started in private practice, they tend to run the business out of their personal checkbook. Do not do that.
Don't.
Set up a separate bank account, a separate everything, just like it were a separate person managing everything. A few other little things to think about with this. A few other little things to think about with this are some different ways to set up different entities. Another type of business entity is a partnership, where two people form a company together, and it's just called a partnership. Now that can be done under the umbrella of a limited liability company, and we'll talk more about that here in a minute. Or it could be done under, other different entities. Probably the most familiar entity to most people is what is referred to as a corporation. And so we think about the big corporations like Exxon, General Electric, these big publicly owned corporations. We'll talk about this more later, but for most private practices, and Julie and I were discussing this before, and Julie, in your practice as an accountant, you've never really run into a situation where it makes sense for somebody to form a corporation where they sell stock and have boards of directors and all that sort of thing.
So I've seen a lot of S corporations, but I have not come across a C corporation in private practice. That doesn't mean that it's not possible. It is possible, but because of double taxation, it rarely makes sense to do it that way.
Right. And we'll explain that a little more. For some people in some states, if you are licensed by that state, you have to be designated as a PLLC, and that's just a professional LLC. And so it's just another kind of designation for a limited liability company. And it's just, in many ways, it just, because you're licensed by the state, they require you to designate it that way. Other states, they require you to do it as a PC, or professional corporations. And again, it's set up depending on tax purposes, just how you're set up. So it's important to check with your state Commerce Commission to see what your state requires for setting these different entities up.
Because not all of these options will be available to you in every state. So it is state specific, but your state website should be able to show you what legal entities are available to you.
Correct. Yeah. So we're going to jump into tax entities.
We're going to talk about tax entities.
Okay, Julie, go ahead.
All right. So as we talked about before, you can have one legal entity that's a different tax entity. Right. So as far as tax entities, we have disregarded entities, which will go on a Schedule C. So that's on the personal tax return. It will be either a sole proprietorship or a single member LLC that will go directly onto your personal tax return. Then there's pass-through entities. So these entities do not actually pay taxes themselves, right? The business does not owe federal tax, but all of the net income flows through directly to the owner's tax return. So in the case of an SCorp, the net income, not the gross income, the net. So the gross income minus expenses equals the net income, and that income would flow to the owner on a K1. So if there's just one owner, that entire net income goes to the Schedule E of the tax return. And then if there's more than one owner, then each owner would get a K1 depending on the partnership agreement with different proportions. And then each person would individually pay taxes on the business income on their Schedule E. So the same thing happens with a partnership. So a partnership is going to need a Form 1065, so it has its own tax return as well. And then the owners are each going to get a K1, and the entity does not pay tax at the federal level. That net income flows through again to the personal tax return on the Schedule E. So now, in the case where you have a CCorp, that is a completely separate business entity. So obviously that's going to need its own tax return. That's an 1120. And then that entity does owe tax. So that entity does pay tax. And then you would be an employee. So if that's the type of entity that you own, you would be an employee, and you would get a W-2 that goes on your personal tax return for that C corporation.
Right. Again, I know this is a lot of detail to think about, and so it's important to maybe check with, again, laws for individual states are going to vary, but just want to give you an overview of what these different things encompass.
And if you're not sure what you have, you can also look at your tax return. It will say on the top right, is it a 1065? Is it an 1120S? Is it a Schedule C? Where you see your business expenses and income, you should see what that is if you're not certain.
Right. So with LLCs, again, the LLC is the legal entity. But once you set up your LLC, then you have to decide, and this again is where it's important to talk with a tax expert for your area. You have to decide how you want to be taxed in that LLC. A simple single member LLC is referred to as a disregarded entity. You're separated from you're separated legally from your practice, correct, but for tax purposes, you're treated like a sole proprietor.
Correct.
And so for some people, I know that's the case for me. I just am a single member LLC, and so I fill out a Schedule C with my tax returns. The other way with this is if you partner with someone, then you have a multi-member LLC. And again, that's where it's important to think about your business operating agreement. And again, attorneys can be very helpful. Right. It's probably a good idea to have all that, you need to have all that worked out about what percentage you are going to be taxed at. And so again, you might have the forms that Julie referred to, if you're a partnership, you're going to have a different form you fill out and you're taxed in a different way. Then finally, you can also elect to be taxed as an SCorp, an LLC taxed as an SCorp. And so there are some tax advantages to that depending on the size of your practice and the amount of income you're getting in your practice, depending on what you pay yourself, what you're paying your employees, and the cost of running your practice. Again, we're going to talk in a little more detail about these different types of tax designations.
So first, we're going to talk about sole proprietorship, and this is not an LLC, right? So this is a case where you're just doing business under your own name. So there's several advantages. One, that it's very inexpensive and simple, right? You can just go out, you already have a social security number, you can just do business as yourself. It's inexpensive also because it does not have a separate tax filing. but it also does not have the liability protection that the LLC offers. The thing with sole proprietorship and an LLC is that all of the income that you bring in, all the net income, all of it is subject to self-employment tax. And so what that is Social Security and Medicare. It's also referred to as FICA. But in the case where you're self-employed, you're going to be paying the employee and the employer side. And those add up to about 15.3%. So when you are an employee somewhere, your employer is paying half of Social Security and Medicare, and then you as an employee are getting a deduction or being deducted Social Security and Medicare. When you're self-employed, you get to pay both of those because you are your own employer. So as a sole proprietor, you cannot have multiple members. So it just has to be you. But what you can do is file a DBA for a small fee. And DBA stands for doing business as. So this again is state specific, but you can elect to do business as something else. So I can be Julie Harris doing business as XYZ Accounting. So I would have to register in order to be able to use that name, but it is possible. So that's an option.
Right. And one thing I'll say real quickly, Julie, about Social Security numbers, and for people going into private practice, particularly if you're going to be on insurance panels, I think it's just whether you're a sole proprietor or an LLC or whatever, get a separate tax ID number.
That's
It's
true.
referred to, and what you'll hear us talk about this as the EIN, which is Employee Identification Number. Even though you might not have an employee's, get a separate tax ID number for yourself from the IRS just to protect your Social Security number. You don't really want to be giving that out to people. So with a limited liability company, again, depending on what tax designation you have, in this particular example, we're talking about what is also referred to as a disregarded entity. And in this particular example, it's for tax purposes, you treat it like a sole proprietorship. You would file your Schedule C. The advantages to a limited liability company are that you don't have a whole lot more complicated, a single member LLC or disregarded entity. It's not complicated. You do a Schedule C. It's pretty easy to move funds in and out of the company. So, for example, if I want to pay myself, I do what is called a member's draw. And so I take money out of the company to pay myself. And that's different than an SCorp, and we'll talk a little bit more about that. But I can take money out of the company, I can invest in the company, all of those sorts of things, and there are no restrictions on that. You do, however, with a limited liability company, as we mentioned with the sole proprietorship, you do have to pay self-employment taxes. Again, that's something that you really need to be aware of, and that's a whole other topic. But be sure that you do stay on top of that and pay those. There are some extra costs with setting up a limited liability company. For example, you have to register with the state that you're in, and there'll be a cost associated with that, and that varies from state to state. The other thing to take into consideration is some states do have you pay franchise and excise taxes. Usually it's not a great amount of money, but you just need to be aware of those things. And then you have to pay fees each year to re-register the company and keep it on the books with your particular state. As we mentioned earlier, as we mentioned earlier, some states do require that if you're licensed by the state, for example, as a counselor, a marriage and family therapist, psychologist, or whatever, you do have to register as a PLLC or a PC, professional corporation. But again, check with your local state. One thing I want to interject here, again, an advantage to forming an LLC, and I know Julie and I talked about this before we started recording. I think it just gives your business a professional edge.
Yeah.
It's kind of like your credentials for your license or for your degree. I think when people see LLC or PLLC after the name, it just gives a little much better business edge, and for your branding and for marketing and that sort of thing. So
like it's a real business, right?
Right. It's a
Yep.
legitimate business. So, yeah.
And so I want to mention something with the LLC. So both the LLC and the sole proprietorship. So technically, LLC is not a tax designation, right? So, but we just wanted to talk about those separate to show how they're similar, how sole proprietorship and LLCs are similar as far as tax purposes. But with both of those, you are not putting yourself on payroll, right? So when you want to pay yourself, as Gordon mentioned, you're going to do an owner's draw. You can either write yourself a check, transfer money from your personal to your from your business account to your personal account, but do not put yourself on payroll. And that goes for partnerships as well.
Right. So you want to talk S-Corps?
Yes. So let's talk about S-Corps. In a lot of cases, they can be a great way to save on taxes in some cases, but there really is not a one size fits all, because the 2017 Tax Cuts and Jobs Act was actually very good to the LLC. So the S-Corp is no longer the slam dunk tax advantage that it once was. And mainly it's because it is more costly to set up and maintain. So setting it up, there is going to have some costs, usually some legal fees, definitely some accounting fees. You're going to need a solid set of books. You're also going to need to be on payroll. So you're going to have an expense for that payroll subscription. You're going to need to figure out reasonable compensation, but then it's also a completely separate tax return. So there's typically going to be an additional fee at the end of the year for that as well. So all those things do add up. And that means that you have to be making a significant amount of money in order for this to make sense. One of the advantages is that it still has all the liability protection that an LLC will have. One of the drawbacks is that the owner is required to be paid a reasonable compensation before any distributions. This one is so important, I'm going to say it twice. The owner is required to be paid a reasonable compensation prior to any distributions. That means you cannot take any money out before you are set up on payroll and paying payroll taxes. This is a step that often gets forgotten or missed. And if you do this incorrectly, the fines and penalties are very significant and they add up very quickly. So proceed with caution. If you are an S-Corp, you really should be working with professionals who can help you manage this correctly and keep you compliant.
Right. Yeah, and one of the things, just to again clarify, because I think in the questions I get from people, this is a little bit confusing. The S-Corp is a tax entity designation. It's not a legal entity designation. So if I form an LLC, like we said earlier, even if it's a single member or multi-member or whatever, you designate at the beginning, once you start keeping your books, how you want to be taxed or how you should be taxed. And that's, you know, a lot of times vendors will ask you to fill out a W-9 form, and they'll want your tax ID number. And if you check the box for LLC, it also asks you how you're taxed.
Right.
For that.
It does ask that. Right.
Yeah. So again, like Julie said, talk to a tax expert on this before you jump into starting an S-Corp. You really want to make sure you understand.
Definitely. And then one thing we didn't mention yet is that some states do impose an additional tax on S-Corp. So this is another reason why you really want to do your research and run the numbers before doing the S-Corp election. because you may find yourself in a situation that's actually more expensive than the LLC. And I've seen that happen many times. In some states, so the SCorp election, when you're an LLC, if you elect to be taxed as an SCorp, that is a federal election. And some states require you to also make a state election. So again, just check your state there. And one of the advantages of the SCorp is that you are both an employee and the shareholder. So you're getting paid with a W-2 at the end of the year. You're getting a W-2, but you are also a shareholder that's getting a K-1, and that's where the tax savings is. You are paying self-employment tax on the W-2 income that you've paid through payroll, and you are not paying self-employment tax on the net income that goes on the K-1. However, you are paying federal and state tax on that. So you're not paying self-employment, Social Security and Medicare, but you are paying federal and state if applicable.
Right. Yeah. It's again, you want to run your numbers on that because of really understanding how it all fits together. Mm-hmm. Okay. C Corps. So a C corporation again is a true separate entity. It's like a totally separate person. The thing about setting up a C Corp, very, very rarely would you probably be in a situation where you would want to do this unless you aspire to just building a practice that's maybe a huge multi-location practice where you want to have shareholders and a board of directors and all of that sort of thing.
And even then you probably wouldn't start here, right, Gordon?
Right. This is just really, this slide is here for your information. It's your tax, you pay, if you have a C Corp, you're paying yourself a salaries out of this, and then you're treated like an employee of the corporation, and then the corporation pays a whole other tax, has their own tax form, that sort of thing. So again, just for your information, this is what a C Corp is. It's what you traditionally think about with large corporations. They're their own entity.
Like a Coca-Cola or a Pepsi, like those are large corporations. So those entities pay federal tax at 21% on their income. And then you are, again, a shareholder and a shareholder and an employee, but you cannot just move money in and out of a C corporation.
Right.
Yeah. So how do you choose the entity that's right for you? And so this is an area where Gordon and I have actually had a lot of discussion. And we think folks that are just getting started, and this is just our opinion, is it's better to start small and then take baby steps. A lot of times people will come to me in my accounting firm and they've kind of put the cart before the horses, and they started an entity because they thought it would be simpler or cheaper, or they just wanted to do it themselves, and so they did it a certain way, and it turns out that way is actually costing them literally thousands of dollars a year. I've encountered two just in the last 2 weeks. So it's okay to start slow. It's okay to just open it, just have an LLC and just start there and see what the future brings. Right. And then I really think before you make any decisions, you really need to check your state website. And if you Google your state and LLC or your state, and most states are going to have a business web page where you can find out what are the options available to you. Also, what are the taxes on each different entity. You want to know those numbers before you make your final decision.
Right.
I also think you really should consider having an operating agreement for the business, and you definitely can go with an attorney for that. You can also do a legal Zoom or a Swift filings, but you want to put some structure onto what your business is going to be, especially if there's more than one person. Like if you are starting a partnership with someone you worked with at an agency or multiple people, you want to have that partnership agreement that really, with an attorney, talk about the options of how you're going to structure, how much income everyone gets. What does it depend on? Is it split right down the middle, or is it based on how much you're each bringing in? So you want to have those conversations early on before the entity is formed, so everyone is on the same page. When you're started, you really want to get an EIN, and it's again, the EIN is an employer identification number, also a tax ID number. It has a couple of different names, but you can go on the IRS website and get that within a couple of minutes. It's very, very easy to do. It doesn't take a lot, so you want to get that. And then once you have that, you should open up a separate bank account for your business. That's kind of the basic of getting started, right? So separate entity, separate bank account, know what the ramifications are of the entity you choose, and then just start from there.
Yeah, yeah. And again, check with your state, like Julie mentioned, your state. Most of the time it's the Department of Commerce in most states that kind of handles this part of it. But again, Google it. You can get lots of information there. And again, just to reiterate, get a separate tax ID number for your practice. Again, it's very simple to do.
If you're not sure of what to do, I think it's money very well spent to talk to a professional and help you run the numbers. If you're not sure how to do those yourself, run the numbers. Doing that up front can save you a lot of headache and cost later down the line. So
right. So we've covered a lot here, and we've really just hit the highlights of this whole concept around legal entities and tax entities. Just talked about how a legal entity is just that. It's a legal thing that is set up where you separate your business from you as an individual from a legal standpoint. Also, the different tax entities of how you can set this up and designate how you're going to be taxed for your business. And this is just a lot to cover. We're going to answer some questions here in a minute that we had from people, but again, this is a lot of information, and you're probably wanting to know a whole lot more about the concepts around this, just about business finance and about how to set up your books and all of that sort of thing. And the good news is that we've created a way to do that. And that is through this course that Julie and I have put together called Money Matters in Private Practice, where it's a full course that covers the whole financial side of private practice.
And Gordon, did you want to show on Teachable what is in the course?
And we'll definitely do that. But let me explain to you a little bit about what's in this course. And I'll show you on Teachable. But what we're covering in this is basic accounting, business entities, like we've covered some today. Again, it's more than just the highlights, just really understanding about success ratios and that sort of thing. You want to say a little bit more about the success ratios, Julie?
So success ratios I've developed in my firm just based on working with over 100 private practices. So I looked at the trends of what are successful private practices doing in their business. And I've looked at ratios. So I've established ratios for solo practices and for group practices that help you be successful in your business. So we can help you track that. And we have a whole module just about success ratios and how to look at those in your business. We also talked a lot about hiring. So we talked about contractors versus employees, setting up payroll, understanding tax deductions, and just so much more.
Yeah. So let me show you here real quickly on the screen what that course looks like when you enroll. So when you enroll in the course, this is what you'll see. As you can see, there are several lessons here. There are several hours of content here, and when you just click on the particular lesson, it'll bring up a video where we'll just teach you about the different concepts here. I'll pause that here so that you don't have to listen too much to the intro there. But also with the video are just some lessons and information. And so with this particular course, here are what the modules include. There's your money mindset, which is a great place to start in just thinking about how you think about money. There is also a module or a lesson in here just on some basic accounting. This is something that most of us don't learn in graduate school, and so understanding these concepts so that when you talk to someone like Julie, you don't look at her like a deer in headlights, and you know kind of the language and know the concepts. Again, one of the things we covered today are just more in-depth information about business entities and how they can affect you. Also, there's a module in here on basic bookkeeping and reports of how to understand your reports that you're looking at. One of the great things that Julie helped me add or added to the course is just how to set up QuickBooks. QuickBooks is kind of the gold standard for bookkeeping software or accounting software. And so Julie goes into detail here, showing you how to set that up using QuickBooks Online. Also, a whole module in here about taxes and understanding how self-employment tax is different than regular taxes if you're working for someone else, and being able to understand that. Another whole module here, premium content module on tax deductions, of really understanding what you can deduct and take essentially discounts for on your taxes. And Julie talks about that. Another module here on just how to set your fees, of knowing what to set your prices for your practice so that you can be profitable and be able to cover your expenses and cover your costs of operating. Also go into detail about creating a financial plan. As I like to say, if you don't know where you're going, how are you going to get there? So knowing how to create a financial plan for your practice and knowing how to plan ahead and be able to kind of budget and that sort of thing. This particular module, the power of allocation, this is really kind of one of the most exciting modules, at least for me personally, where we talk about profit first. Mike Michalowicz, who wrote the book Profit First, I was able to interview him for one of my podcasts, and I include that interview, the video of the interview, in this particular module where Mike talks about the whole concept behind that. And then connected to this, that we mentioned earlier, are the success ratios that Julie has come up with based on her work with all sorts of different size practices. And then also included in here are just information and understanding of when you go to set up a group practice, when you start bringing on contractors or employees, how to do that. And then that leads into how do you pay them? You know, how do you set up payroll and compensation for the people? And then we also talk about how you can set that up on 2 different platforms, either in QuickBooks or another one called Gusto, which is a payroll program. And then finally, planning for retirement. That's not something we generally tend to think about, but it's something that we definitely need to be prepared for. I'm starting to get at that age where that's actually on my radar screen quite a bit. So I've got to be able to think about it sooner rather than later, and just understand how you need to prepare for that.
So one thing I love about the course and how it's set up is that it's really bite-sized pieces. So you saw there's a lot of smaller modules. So you can either jump around if there's something specific you need right away, or you can just follow at your own pace. But there's really nice bite-sized lessons. And I really, really love the lesson about money mindset. I think that is so well done by Gordon, because there can be so much shame about making money in this helping profession that you're in. But you go into business in order to be able to support yourself and your family. So that is one of my my favorite lessons.
Yes.
So I think this is a great course for people who are just getting started, who want to set up their own financial system, either because they don't want to or can't afford to have any help. So I think it's also a great fit for people who do want to either soon or very soon or already have either a bookkeeper, an admin, an accounting firm like mine, helping with the books, but that really need help with understanding what's going on. You still want to know what's going on in your business. So I think this can really help alleviate some of that frustration, just understanding what all of these numbers mean.
Right. Knowledge really does empower you of being able to understand all of this. And I think for so many of us that are in private practice, our skill is in clinical training and learning how to be really great clinicians. But when it comes to the business side of things, it's sometimes something that is, for some, just hard to get our head around. But you can get your head around it when it's broken down into smaller pieces. And that's really what the course is designed to do. And that just kind of talks about kind of some of these things to think about, numbers and financing and finance. Again, a lot of people get really intimidated by that. And they might be thinking that I can, barely can handle my own finances at home. How am I going to get my head around all of this? Well, that's what the course does, is it helps you get your head around it, and it breaks it down into really small, simple, easy to understand concepts and pieces.
So in this course, you get a lot of things. So first you get Money Matters in Private Practice, and the retail on that is $297. You also get what I call Accounting 101, and that's something that we offer in my firm if we're doing some one-on-one a couple of hours of training on just basics of accounting. That's what you would pay if you went directly to the firm. How to set up QuickBooks online. So we would at a minimum charge $500 for that, more if there's any catching up to do. You also get setting up payroll. Again, if you were coming to GreenOak Accounting wanting for us to set up payroll for you, you would pay a minimum of $500. But you also get my success ratio calculator, and there's no price on that, but it's priceless, I would say. So total value, you're getting is over $1,700 in material. But obviously, we didn't price the course at $1,700. We wanted to make it accessible, affordable, and valuable. And so we did that. We did just that. So today, we're offering a very special price on this package. So it's Money Matters in Private Practice, plus all the premium content that we've recorded together, plus a 1-hour consultation either with Gordon or with myself. You can pick our brains about anything you'd like in that 1-hour consultation. So we are offering that right now for $299 one-time payment, or 4 payments of $80. That is, I think, the lowest we ever offered that, right, Gordon?
Right. And we just when we decided to say, okay, let's make this really affordable for people, we said, okay, we're going to do it. So,
and with that consultation too, we've had a few, and you can come with a whole agenda and jam pack that hour and get a ton of value just out of that alone.
Right. And then if you don't really feel like you need the consultation and just want access to the course, again, the price, the webinar price for this course is $199. Again, normally it's just the course itself is $447 normally, but you can get it for $199 for this short period of time. Or if you prefer, you could do 4 payments of $55 a month. This is how you do it. So if you go to practiceoftherapy.com/money matters, and then when you go to enroll and check out, just use the coupon code entities19. And the thing about it is that we can't really keep this open forever. So it's just going to be available until October 20th of 2019. So just want to make sure that you understand this is just a quick, short time deal. So take advantage of that.
Take advantage.
Okay.
So we'll leave this up for a little bit. Are we going to go into some Q&A, Gordon?
Yes. So let's talk about some of the questions that we've had, just to answer those, because we've had a lot of great questions along the way.
So we asked for some questions prior to the webinar, and we were lucky. We got a ton of really great questions. So we are going to go over some of those. Did you want to exit the presentation?
Yeah,
Gordon?
sure, we can. One question that we had, I'm just looking at kind of our list here. What are the appropriate steps necessary to change from a sole proprietorship or PLLC, single member, to an SCorp? And sometimes that happens in that you start out, like we mentioned in the webinar, you want to start small and you want to switch over to you're growing and you're thinking, okay, the tax advantage might be to my advantage to switch
Right.
to an SCorp. Got to be
How
careful
would you do
about that. So you want to say a little bit about that, Julie?
Yeah, so I'm assuming at that point that you've already run the numbers, that you know for 100% sure that this is the best entity for you, and you've talked to a tax professional. So then you would file form IRS form 2553. You probably want to get some professional help to fill that out. So you'd file the 2553. That's usually going to take, depending on the year, about 6 weeks or so to get processed. So at that point, so you're going to file 2553, and then you would get started on payroll right away. So as soon as that's done, you're going to check your state requirement. You're going to sign up for withholding tax with your state if that's applicable, and then you're going to start payroll for reasonable compensation right away.
Mm-hmm.
Yeah.
Yeah, but it's the other thing too is once you set it up, you can't really go back and change it for 5 years.
Yeah, so that's one of the other questions that we had is if let's say you set it up and it turns out not to be a great decision, you cannot change your status again for 5 years. So just really proceed with caution, because you may not be able to reverse what you did without actually shutting down your business. So just keep that in mind. Once you have made that election, you have to keep it for 5 years. There are some rare exceptions, but generally you're going to keep it for 5 years. Yeah. So that was another question that we got.
Yeah. So another question, which really is a little more basic question. We covered a lot of this in the webinar. Was just what really is the advantage of forming an LLC versus just staying as a sole proprietor? And I guess the biggest thing, and I know when Julie and I were first putting this webinar together, I kind of asked her that question, and her answer was liability, 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 and that you really do want to reiterate, separate yourself as an individual from your business. And so by having the legal entity and also the tax entity, you create that space there. Mm-hmm. And I know when I first formed my LLC, I remember asking the attorney I was working with, okay, is there any reason why I wouldn't want to do this? And he said, I can't think of any. So, yeah. It's probably a good idea from the very beginning, even if you're small, just getting started, to maybe go ahead and start the process of forming at least a single member LLC that you're going to treat as a disregarded entity or sole proprietorship. It's a pretty simple process. And like I said, you can do it online. For most states, you can register online to do that. It might be that once you get it registered, I know in Tennessee the process is that I registered online, I paid my fees online. They sent me the paperwork, and then I had to take the paperwork to my local county clerk to have it registered. Mm-hmm. And then once it's registered, you not only protect yourself legally, but you protect the name of your practice, because no one else in your state can form a practice in that name. And again, I think the big advantage is that you just really create some clout, so to speak, with your business, and that you're able to show that you're legitimate because you've registered with the state, and it creates that buffer there, that separation. Firewall. Right.
And so a related question that we got also is, why would I create an LLC in one state, for example, in Delaware, if I work and live in another state? And that one really, truly is a legal question, because tax-wise, you can create an LLC in Delaware if you live in Tennessee, but you're still going to pay taxes in Tennessee because the work is being performed in Tennessee, right? So there are legal reasons to do it that way, and so I would talk to your attorney about that. But it does add a level of complexity. It does add additional reporting requirements as well, since you have to pay the fee at the Delaware level also every year. So, there's a lot of rumor mills sometimes as far as, I heard that this is better or that is better. Just be careful of the rumors and talk to an advisor about your specific situation.
Right. And I think, that kind of that, as you mentioned, Julie, the rumors around forming, registering an LLC in a state beside the one you live in is really geared more towards people that might be entrepreneurs that live outside the United States, and that they feel like, okay, if I'm registered in the United States, it gives it more business legitimacy. In some states too, as we mentioned in the webinar, there are some franchise and excise taxes a lot of times with a legal entity. And for some states, that might be quite much higher. And so you avoid paying those taxes in one state to pay them to another that's less expensive. So again, talk to somebody that's really an expert in forming those things. We mentioned also in the webinar using things like LegalZoom and Swift filings. If you go to my website, practiceoftherapy.com, and go to the resources pages, you can see a link there for Swift filings. And it's just an online company that does all of that for you for a fee. Again, do your comfort level. If you would prefer to work with someone locally, the Swift filings, the people that I know of that have used it have been very pleased with it. And it also gets you that business operating agreement where you can set that up as well. Mm-hmm. So again, those things. So, Julie, go ahead.
I want to pose a question to you. So one of the questions we got is, it's a little bit long. I'm exploring the possibility of starting my own practice. Due to a variety of circumstances, I would not want to start seeing my own clients until February of 2020. My question is, if I start the process of creating an LLC now, so I can begin getting independently credentialed with insurances, will I be responsible for any fees and taxes associated with having an LLC for 2019? Or do taxes and fees only start once there's income and profit associated with the LLC? Trying to figure out if it would make more sense financially to start the process now or wait till 2020.
Right. Yeah, and that's a great question. And I think there's really no easy answer to that. But for tax purposes, if you're not bringing in any income, you're not taxed. So
right.
So
on that side, you would either do if there were no income, you would file a $0 Schedule C, or you would report the EIN with no activity, right? So you're basically saying there's no activity. If you actually do have expenses, they're generally going to be considered startup costs. So those are not deductible until your doors are open for business. So you just want to keep track of those carefully. Of like if there's fees associated with starting your website, that type of thing, just getting up and running, keep track of those. And those are deductible in the year in which your business is open for business, where the doors are open.
Right. The other part of that question is about really has to do with getting credentialed, credentialed with insurance panels. The thing that you want to be sure to do if you do that is make sure that your tax ID number matches your LLC if you form your LLC, because otherwise it can get really complicated with the insurance companies if you're using different tax ID numbers for getting paid. I know I learned that the hard way just because I went through that. When I formed my LLC, I had to change my tax ID number with the insurance companies, and so it delayed getting payment from them when I actually did see clients. So just what I would say is the quick answer, maybe the short answer really to that is, yeah, it doesn't really matter when you form your LLC. Just make sure you document what you do. And then when you start getting credentialed with insurance companies, use your LLC name for payment. Also, with filing insurance claims, again, it varies from insurance company to insurance companies. If you're forming a group and you've got people working for your practice and you're credentialed as a group with that insurance company, a lot of times too, those people have to be credentialed as well. And so again, it can be a complicated process, but I guess really kind of to get back to the question is make sure everything matches up and that you've got documentation for everything when you start doing this. Again, forming an LLC is not a real complicated process, but I would say when you register with your insurance companies, you just want to be clear about who the check is made out to and the tax ID number associated with that. Because at the end of the year, you're also going to get a 1099 form from the insurance companies. And so you want to just make sure all that lines up for your taxes.
Sure, that it's going to the right place.
Right.
One of the other questions that we got, Gordon, is can you talk about the need for an NPI and tax ID related to business entities? And so the NPI is National Provider Identifier.
Right.
Can you speak to that?
Yeah. So what they're speaking about is really that, again, that just affects the insurance side, not the tax side at all. But depending on the insurance companies, if you've got like a group, in other words, several people working for you, you're going to need to have a group NPI number that's also attached to your business entity name. And so that's something you would set up through the NPI registry. But also your individual people that are working for you are going to need to have individual NPI numbers. And again, it varies from insurance company to insurance company as to which they use. Some insurance companies are only concerned about your tax ID number. Some are concerned about the NPI number. But there's individual NPI numbers and then group NPI numbers. And if you're not forming a group, but you're just a single member NPI, a single member or solo practice, you wouldn't need a group NPI number because you're just working as an individual. Again, NPI numbers have nothing to do with tax ID, right. But insurance companies use one or the other or both. So.
Or both. And as far as the tax ID, so tax ID, EIN, employer identification numbers, those are all the same, but we really recommend, no matter which entity you choose, to get an EIN right away. That's our recommendation. You can do that on the IRS website. So that's very good. 5 minutes or so.
Right. Well, Julie, I'm looking at the clock and realize that we've filled up a whole hour, if not more, of information here. I'm just going to show real quickly again, folks, how they can access the Money Matters course that just goes into detail about most all of this stuff that we've talked about. You go to practiceoftherapy.com, Money Matters /Money Matters, and you can get the discount on the course plus the consulting with me or Julie, or just the course. Get that discount by using this coupon code Entities19, and this offer ends October 20th, so just a few days from now of when you're watching this. So I think that's it for us, Julie. Hope this was helpful, and look forward to seeing you in some future webinars. I know we've got one coming up, just getting ready for tax season. And nice. Julie and I have talked about that. So got that coming up. So stay tuned for all that.
All right. Thanks for joining us today.
Okay. See you, folks.